Good morning, everybody. This is the live market open for Friday the 13th of May, the end of the week. I'm Yohay, Elam, Forex Crunch Market Movers podcast, doing the show as usual for FX Street. Hope everybody had a good trading day yesterday. Today might become busy. It already began with some moves in euro dollar, at least, that has been quite asleep. Anyway, as usual, we'll cover recent developments in markets, cover the various charts and levels. The next the hours remaining to the week, to this day, less than 24. And of course, your questions. If you cannot see the chat box alongside the video, please go to the address here, tlk.io/fxrate-forex-live-video. Good morning, Ed. Good morning, everybody else that's here in the room. As usual, on Friday, we'll also do a preview for next week's events. So what's on the agenda? What's going on in markets? The dollar remains in control. It's general, it's across the board, but some currencies are weaker than others, some are stronger than others. We'll cover that while we go over the charts. Stocks and oil are not going anywhere fast. Okay. We had a big rise in oil prices on Wednesday, and we maintained those levels on Thursday. Same with stocks, a bit of pressure to the downside. But I would say sort of mixed and not very distinctive move to either way. Yesterday, the big event in the markets, which I covered with Mauricio and Valeria, was the Bank of England's rate decision. Of course, the Super Thursday. Basically, they warned on a recession and a Brexit. Okay, that's what the British press was talking about. But they raised inflation forecasts. That basically left the pound relatively unchanged. Now it is sliding, but yesterday we had some moves. But in general, after the wobble of a few hours, we returned to the same place. Let's talk a bit more in detail, perhaps, about what we had yesterday in the UK. Well, as you know, it's called Super Thursday because rate decision, no change. The meeting minutes, no change. 9 voted unanimous vote for no change in policy. And the focus was on the inflation report, Mark Carney's press conference, and the meeting minutes. So for markets, the most important thing to take out was that inflation forecasts have been raised just a bit. Okay, growth was lowered, inflation was higher. Okay, that's why the pound initially gained ground. Okay, then the focus was on a Brexit, the impact of a Brexit. A British press said that Mark Carney made his starkest warning about the Brexit becoming political. Some called for his resignation. He's doing what his boss, George Osborne, Chancellor of the Exchequer, wants. In fact, it was just a reaction to a question, and he repeated several times that nobody really knows, even the Bank of England, what the real implications will be. And of course, one of the possibilities is recession. Just I want to point out that if you see those headlines, his words were much more nuanced than the headlines suggest. Anyway, again, the Brexit doesn't depend on Carney, it depends on the British people. And the opinion polls have much more impact regarding Brexit on markets than any statement of Carney or any politician, okay? So the opinion polls and the one that does make the difference, the poll on June 23rd, all these make the difference. For markets, the takeaway was that inflation forecasts were a bit higher, and now we're returning to the regular movements in pound dollar, which are more dependent today on the strength of the US dollar. Okay, let's continue with the other events we had yesterday. Eurozone industrial output missed with a drop of 0.8. Wasn't such a big market mover. In the US, we did have a worrying figure. US jobless claims jumped once again to 294. Alongside the jump, alongside the miss in the non-farm payrolls, I think there are beginning to emerge in the past 2-3 weeks reasons to worry about the US job market. It may be a one-off, a two-off, but and just nothing is linear. But if the Fed had, and the Fed has two mandates, inflation and employment. Inflation was always a problem, not only related to oil prices, and employment was rising steadily, 200,000 job gains per month, falling unemployment rate, more people pulled into the job market because a higher participation rate. That's what happens when you have more people working. Eventually, those that are discouraged, depressed on the sidelines come back. And that was the reason also for wages to rise slowly. But in general, there was talk that the US is getting closer to full employment. That means less job gains. Okay, that's good. I mean, that's for a good reason. And more pressure on wages. We've seen that in the last NFP report. But I'm beginning to fear that the slow rise in jobs is not because we're getting to full employment, but because the low growth we've seen in Q4 and Q1 is beginning to trickle down into the job market, and that's not a good sign. Of course, more data is needed. Today we have a key US figure not related to jobs, retail sales. We'll talk about that. It didn't move markets yesterday too much, but after a few really good weeks in jobless claims, we've seen a negative turnaround, and yeah, watch out for that. Import prices missed with 0.3, well, not such a big miss. Now I was talking about the Fed, about things becoming not seeming that good, but Rosengren, a dove that was recently making hawkish comments, made further hawkish comments, and so did Esther George, which is a very, very known hawk. They remain optimistic. They think that more rate hikes are coming, perhaps sooner than later. Perhaps that's one of the reasons for the strength in the US dollar that we're seeing now. To answer your question, Fabian, good morning. Good morning, Damon. That's one reason, perhaps, because at least on Bloomberg TV, they've been mentioning these hawkish comments by Rosengren and George. Rosengren, it's not the first time he's making hawkish comments, even though he's a known dove. The president of the Boston Fed already did this a few weeks ago, alongside other sort of centrists, doves. And then we heard Yellen and Dudley once again lean to the dovish side and having the really bigger impact, okay? Another reason is just we've seen since Tuesday last week, we've seen this turnaround Tuesday, and the trend currently continues. Today we have the real test, I think, for the US dollar. So we've seen the US dollar fall to the abyss last Tuesday, May 2nd, May 3rd, then turn around, make a huge rally. This week it's been more consolidating, retreating just a bit. As I mentioned, it was just a correction, not a change of trend. Today we're seeing, at least against some currencies such as the euro and the Aussie, a resumption of this US dollar strength trend. But today it faces a real test, retail sales. This figure has disappointed so many times in the recent year or so. Hardly any positive surprises. We had one positive surprise in February for the details for the retail sales report for January, but that was eventually corrected, revised down. Consumption is a huge thing in the US economy. For more hikes, for more growth prospects, we need US consumers to buy a lot, for retail sales to rise. Expectations are relatively high. If we have, if the number meets expectations, or of course if it beats it, it could see more US dollar strength, the continuation of the trend. But if we have a miss on this key figure today, perhaps we could see not just a correction, but a significant turn down for the US dollar. Okay, we'll talk about also that, the numbers themselves a bit more in detail. Just to long answer to the short question. So yeah, and in New Zealand we had retail sales slightly missed expectations. The Kiwi remains relatively resilient. Okay, enough talk. We talked only about one chart. Let's begin from the top. Euro dollar. This morning we actually had German GDP beat expectations, come out at 0.7 quarter over quarter instead of 0.6. But US dollar strength continues. Now, euro dollar is trading at 113.41. The low so far for today, 113.37, just above the 133.35 level. Why am I talking about 133.35? Because when we had this frustrating range trading here, 113.35 was the bottom, okay? And it was also the top right here on March 17th, after the euro made a turnaround on Draghi's "we're done for now" comment. We reached 113.35. Later on, the pair traded above this level, and now we're falling to support exactly at this level, or 2 pips above. Let's see if it holds. Let's see if it remains a serious line of support. So far, this line is holding up, but we'll have to see. 114.10 resistance followed by 114.60, which is much stronger resistance, the post-crash high of 2015. On the downside, if we have an extension of this US dollar strength, I'm looking at 112.50 and 112.20 as further lines of support. Dollar yen 108.60, leaning lower within the range. So here we're not seeing US dollar strength. Now you could call this perhaps a return of the risk, off sentiment, okay? Because the yen is strengthening against the dollar, but the dollar is strengthening against all the rest. I'm not so sure that's what's going on here, because the dollar yen seems to trade within a range. Watch out for 107.65, which has been a clear separator of ranges in quite a few occasions. 110 is a key level to the upside, okay? And perhaps we can have this line here, 109.40 as resistance, because that's been a double top this week, okay? So we have nice levels right here in dollar yen, but all in all, I see it as range trading. Dollar CAD, we're seeing US dollar strength right here. 129.30 is weak resistance, very strong resistance at 130. 128.30 is weak support, strong support 127.50. Dollar CAD, when we talk about CAD, we talk about oil prices. They're slipping just a bit, but all in all, on Wednesday we had drawdown in inventories of crude oil, distillates, gasoline, and we had a move to the upside in oil prices because of less oil produced not only in Canada, where there are fires over there. I think the authorities are making progress in extinguishing these fires. But anyway, oil prices remain elevated despite some kind of a drop we're seeing this morning. So the Canadian dollar is weaker against the US dollar, but not extremely. One of the weaker currencies is the Australian dollar since last week, when it reached, 2 weeks ago, when it reached the peak of 78.40. It's been on a downward trajectory, okay? The RBA hit it twice, cutting rates, slashing forecasts later on. The pair did find support at 73, managed to stabilize, but now it's resuming the downtrend. We did not have any significant release from Australia. News, nothing significant from China, just some talk about, from China, worries, the regular worries about markets, okay? So I wouldn't, it's just the US dollar strength manifesting itself in a stronger manner against the US dollar. Okay, Kiwi dollar, weak retail sales do weigh on the Kiwi, but not as much as I had expected. So again, we're on the lower side of the 68.20 level. 68.20 is not that strong anymore as it used to be. It used to be a good separator of ranges. Anyway, 67 is a round number support to the downside, 68.80 to the top side. The miss wasn't that bad, okay? The miss wasn't that bad, but it was still not a good sign. The Kiwi did manage to recover this week once the RBNZ did not provide fresh hints about a rate cut. I think the path is for further rate cuts in New Zealand, but at least for now, the Central Bank of New Zealand is not in a rush to follow the RBA with rate cuts, okay? Dollar Swiss, once again, here we're seeing this reflects the strength of the US dollar, higher within the range. 98 remains a strong resistance, 96.40 is support. Euro Swiss, well, consolidating some of the gains it made above 110, already reached 111. I would say a better support line perhaps would be here, 110.15. Anyway, this is quite a choppy pair of very narrow ranges. Euro pound maintains, is unable to break above the 79.30 line, which kept it and worked also as support yesterday. And the pound gained some ground. Again, higher inflation forecasts eventually, well, helped the pound just a bit. Anyway, but this cross is hardly moving. 78.30 to 79.30 is the range. Support at 77.40, high resistance 80.25. Euro yen naturally sliding when the yen is gaining some ground and the euro is falling. All of this against the dollar. So the cross 123.24, just above support at 123. Not really strong support, much stronger support at 121.65, resistance at 125. And the dragon reflecting here the strength of the yen this morning, 156.43 at the moment. 158.50 worked very nicely once again as resistance. It worked here very nicely as support, here as resistance. So 158.50 is a recurring theme in pound yen, the dragon. To the downside, we have 155.80. Okay, we covered all the pairs. Let's see, we have here a comment, a question from Luca. Good morning again. Fed hawks getting impatient and loud, but in the end, Auntie Janet will have her way. I think I agree. Retail sales today is a key for the US dollar in my view. Okay. And thanks, Luca, once again, as always, for sharing the charts. I'll share it with everybody in the live video. So this is what you're looking at. We've been sharing these two trend lines, this downtrend channel in the US dollar for a few days, for now a few weeks even. So failure to break above downtrend resistance could lead to a fall. Yeah, I agree. And yeah, and I also agree that Janet Yellen has the last word in the United States. Yeah, sounds like an auntie. Dale Pinkert makes a great imitation of her. Basically saying nothing each time. Well, not saying nothing, but dodging questions like, well, if things get worse, we'll cut rates. If things are better, we'll raise rates. Nothing that is beyond common sense. But anyway, but her general message was for markets that they're not in a rush to raise rates anytime soon. We would need strong data to do so. Okay. Anyway, thanks for sharing, Luca. Okay. Yeah. But while I agree that the doves are in control in the Fed, I think that in other central banks the situation isn't much better. So the US dollar remains, at least this week, the cleanest shirt in the dirty pile. Okay. Fabian says, Yohay, have you maybe seen that issue about dollar index DXY having values on your charts different than those of charts of Luca and mine? For example, at this moment, DXY is 11,920. Yeah, maybe if you provide the, I really don't know we're looking at different things. Yeah, I'll have to check it out anyway. Yeah, I've seen this in the past. My DXY is at 94.36. US dollar index. Anyway, I have your same price, Fabian, 11,920 from FXCM dollar index. Okay. So it's a different one. I'm looking at the DXY, okay? So I'll try to find out which is the more standard one, okay? Anyway, we talked about events we had yesterday, and we mentioned already events we have today. Before that, my favorite rate expectations, implied probability according to the bond market, 7.5% for a rate hike in June. If we have an excellent retail sales today, this might rise maybe a bit, but I still don't see the Fed raising rates before December. In December, we do have, according to bond markets, a decent chance of rate hike, close to 60%, so it's a bit higher. Maybe already, no, first rate hike according to bond markets at the moment is December, okay? after the elections. Anyway, I don't see the Fed raising rates 1 week before the Brexit referendum, which is considered by many a global event. So, and I also think it's a key event because if the UK leaves the EU, it might be the beginning of the end of the EU. And lots of uncertainty, not only for the UK's trade relations, but for the whole world. Anyway, DXY was originally a product of FXCM. If there are more, that would be interesting to know. Okay. I didn't know that. I thought it's DXY is a product of, well, anyway, I'll have to check that out. So yeah, good morning, Sirik. Good morning, everybody. Let's talk about the event for today. First of all, as I mentioned, we had the German GDP figure at 6 GMT. Came out better than expected at 0.7, which is very strong growth. Remember, it's quarter over quarter, not like in the US annualized, so it's good news. Okay, when we had that didn't help the euro at all. At 8, we have Italian GMT. Italy is the Eurozone's third largest country, third largest economy. Sorry, to be more precise. Expectations there stand on year over year 0.9 growth and month over month, quarter over quarter 0.3, stronger than the first quarter. That should have a minimal impact. That's just after the show. More importantly, we have the GDP for the whole Eurozone. This is year over year, quarter over quarter, expected to be confirmed at 0.6 because we already had a very initial, a preliminary release back last week when we did have figures from France and from Spain. So now we'll have a revision of that. I think it might be a bit higher because Germany's GDP was higher, but we also have to wait for Italy's. Remember that this is real GDP, but nominal GDP, if we don't take prices into account, can be lower. Europe is suffering deflation. This was very evident here in Spain. Very high growth rates, but based on falling prices. It's better to have this kind of growth than no growth at all, but it's not really encouraging. The numbers are a bit far out. Okay. Anyway, at 9 we have the Eurozone GMT. The big event for today, as I mentioned, US retail sales. Very, very important. This is consumption. The USA is the land of buy, and buy consumption. So quite a few figures here. The control group is of high importance. It appears first on the list because that excludes all the volatile items. It's sort of the core of the core. 0.3 is expected after 0.1. In many, many months, it has been quite low. So 0.3 will be certainly encouraging, okay? This is a classic core sales, also of importance. Retail sales excluding automobiles, a rise of 0.5 is expected. Okay, it's for the month. All the figures are, of course, for the month of April. Mediocre rise of 0.2 was seen back in March. Headline retail sales, including gasoline, including everything, are expected to bounce quite nicely after falling 0.3 last time. They're expected to bounce by 0.8. Okay, with retail sales, we always have revisions. Watch out for that as well. If we have nice rises now, but significant downwards revisions, it could take out some of the sting. And the other way around, the most recent figures are the most important ones, but they don't exclusively dominate the mood in markets. We'll have to see. I mean, the best thing for the dollar would be beat on expectations plus upwards revisions, and the worst would be downward revisions and a miss, of course. I mean, all figures going one way. A bit overshadowed by the retail sales, we have the PPI figures, Producer Price Index. Okay, month over month, 0.3 is expected. Year over year, 0.2. But excluding food and energy, a small rise of 0.1 and an annualized rise of 1%. These are producer prices, not consumer ones, somewhat less important. And then I was mentioning these are retail sales figures for the month of April, and we have fresh consumer sentiment for the month of May. At the preliminary release, it'll be updated later on. Here we're expecting a small rise in consumer confidence from 89 to 91 points. Consumer confidence in theory implies retail sales, so if consumers are more confident now, we'll probably see positive retail sales once we get the figures for the month of May. And the other way around, if we see them fall, we could expect lower retail sales. The correlation here is not really that strong. So yeah, so I'm not sure that we'll have this exact reaction, but it is, I mean, even though the correlation can be somewhat weak, we can expect that that will impact markets. Just a second, yeah. So because, well, the figure does move markets even though the correlation is weak. There's also a revision later on. We also have business inventories, not so important as a market mover, but it sort of shapes expectations for GDP figures. So this means that we'll have the Atlanta Fed GDP estimate later on today, and we'll have updated according to retail sales and also according to business inventories. There I have it, my line of thought returned. And after markets close, we have a speech by John Williams of the San Francisco Fed, considered close to Yellen, considered a hawk. Sorry, used to be considered as a dove, but recently we had him make some hawkish comments. Okay, so these are the events for today. Let's see I didn't miss anything important that I put on my slides. Most importantly, in general, it's an important day for euro dollar. I don't know if Jax is here, but he usually asks what are the most important pairs for today. Euro dollar, undoubtedly, first of all, finally, it's on the move. Secondly, we are seeing it we have GDP figures in the Eurozone and consumer-related figures in the US. The US figures are more important. Okay, I see here some comments, questions about the US dollar index from Luca and from Biuku. Pronounce that. Anyway, DXY and FXCM dollar index have different prices because they have different currencies inside, different weights. Yeah, DXY has been around for 50 years, FXCM only 10 years. Yeah, so it's been, yeah, I also think the DXY has been for 50 years, and it's heavily, the European currencies, the ones before the euro, were heavily weighed in there. The Belgian franc, the Dutch gulder, things like that. So, yeah. And nowadays, of course, it has a significant weight for the euro. So the classic dollar index is more a reflection of the euro, I think 50-something%. Even though, you know, world trade has changed a lot since then, and other Asian currencies, for example, have more weight than they used to have. Okay, FXCM dollar index G10, excluding dollar crosses and commodities. Okay. Thank you. That is what we knew. It should be the same calculator. You say we have different values. Okay, so same formula but different values. Anyway, I would look at what I think the sort of the conventional dollar index is the DXY, not the FXCM one, not the broker specific one. Yeah, trying it down. Yeah, dollar strength after repeated poor jobs reports makes me wonder if these news events really matter. Yes, these news events do matter. And when you see the dollar strengthening after a mixed report, then if it was a mixed report or poor report, if you wish, just shows you how the US dollar has momentum, how the markets are biased in favor of the US dollar. It wasn't a total disaster, but markets decided to cling on to the good figures, not the bad ones. And I think that today we can see this change. If we have another big disappointment in retail sales, we could have the dollar turning south. But but the bias remains pro-dollar. If we have an okay report, it doesn't have to be a small beat. It just has to be okay, in line. That will sort of continue the moves in favor of the US dollar. The momentum is with the US dollar. No rate hike in June is already priced in. Also, no action from the ECB is priced in. But the US dollar remains sort of, again, the cleanest shirt in the dirty pile, as I mentioned. Yeah. I have more comments here. Okay, Luca is sharing with us the net Dania. That's the euro-dollar chart. Okay. Anyway, I just proposed it would be interesting to know who made the other DXY. How is it calculated? How to get the chart? Yeah, I think, as I mentioned, I think it's an old indicator calculated with a heavy weight towards your eurozone currencies. I mean, before the eurozone came into life. But I'll have to research that and get back to you with the full answer, not just something on the top of my head. I see it more as an intervention by other central banks, says Jax. It could be. Everybody wants a weak currency. The eurozone and Japan and China. Well, the eurozone, I would say Japan and Australia wanted perhaps more than others. Canada is a bit more cautious with that. For the pound, it's a bit more mixed. China would like perhaps a weaker currency, but would not like it to be too weak, would not like an outflow. So there is some kind of a difference between the desire of different countries for different values of their currency. Again, Japan and the eurozone are more eager than others. Okay. Just select DXY in the instrument list. Yeah. I use in the show, I use the TradingView app. I also use NetDania. I think both are good. Okay. Yeah. Any more questions? So, yeah. Yeah, you're welcome, Fabian. Shouldn't the Fed be worried about the weak US dollar? No, the US dollar is the world's reserve currency. A weak US dollar supports US exports just a bit. I mean, it supports them a lot, but exports in the United States are not as important as in the eurozone. Okay, the US is a more closed economy. They would like a weaker dollar. They always talk about a strong US dollar, but their policies such as QE weaken the dollar. The Fed did mention that a stronger US dollar in the past year pushes inflation down and dampens and serves as tightening. They never expressed sort of very, very strong warnings about the US dollar. It's not like Japan or the eurozone. Well, Japan is the most makes the strongest complaints about the currency. Yeah, you're welcome. That could bring about more yuan devaluation that scared markets later that year. Yeah, that's a bigger problem also for the eurozone, because with the Chinese yuan trading so closely, almost pegged to the US dollar, if the US dollar weakens too much, then the eurozone products become more expensive for US and Chinese consumers. Yeah, and if the Chinese yuan falls too much, it could trigger an outflow. China does not possess a reserve currency, and that could accelerate the deterioration. Yeah. Ed says, I see the ECB keeps quiet about Iceland that has grown without getting into the euro after its collapse. Why? Well, first of all, Iceland is a very small country of 320,000 people. I've been there 4 years ago. A beautiful country, but not that important on the global scene. But if to answer your question, I think that it's not only the size, and well, it's not the only country that didn't join the euro. They're not even an EU member, okay? But the way that Iceland solved its problems was different than others with the banking system. The banks fell in many places. They were saved in many places, okay? I mean, the Greek bailout of 2010 saved quite a few European banks from collapsing when they held a lot of those Greek bonds. In Iceland, they just let the banks fall. I mean, they're making a very abstract version of the story, but some bankers that were charged of wrongdoing, and even some are serving time in prison. Different approach. Now, Iceland is also a very small country. Not everything that is applied in Iceland can be applied elsewhere. The movie Inside Job has a bit of focus on Iceland. Should be interesting to watch for you, Ed. They were considering adopting CAD. Yeah, I remember that anecdotal. I remember those headlines. They were considering adopting the Canadian dollar. Well, if you look at the map, they're quite close to Canada. That never materialized. It was only an idea thrown into the air. They can export thermal electro power soon. Yeah. Well, they have lots of those geysers, heat coming out of the ground, but exporting it to other countries, given their geographical position, which is quite isolated, that would take significant technology. Luca asked, what about stocks? US index is close to support, wave, weak retail, which sales? Yeah, US stocks have been in range for a very long time, and retail sales, of course, make a difference because many of these stocks are in the retail sector. Okay, so it's time for the wrap-up for today. As usual on Friday, we're beginning it a bit early because we have also the preview for next week. Okay, so this is the wrap-up for the live market open for Friday the 13th. It's the end of the second week of May. We're seeing further dollar strength across the board. Well, not against the Japanese yen. Yesterday, we had the Bank of England, in a way, warn about a recession in case of a Brexit. But for markets, it mattered a bit less. Higher inflation forecasts supported the pound. US jobless claims are worrying at 294,000. Currently ignored by markets, but we're seeing a few negative signs. Watch the space. US dollar strength is attributed to Fed members talking bullishly, talking about rate hikes, including Rosengren and known Duff, but it's not the first time he went hawkish. So I think it's just a continuation of the US dollar strength, and Kiwi retail sales missed just a bit. Okay, charts. Okay, euro dollar is dipping its feet under the waters of 113.35 mentioned as support. Next support is 112.50 and 112.20. Resistance 114.10 and 114.60. Okay. Let's see. We have Eurozone GDP later on, and then, of course, US data. The pound is also slipping, going the same route of the US dollar. 143 of the euro. Sorry, 143.70 is support. We're very close to this level. Further support 142.80 and 142.30. Resistance at 145.60. Okay. Dollar yen. The yen is showing some strength. The yen is showing some strength in comparison, well, across the board and also against the dollar, just a bit. 108.70, 109.40 was the high level twice this week, a double top. Support at 108.25, further support at 107.65, which I see as strong support. Dollar CAD, more or less in range 128.30 to 129.30. The immediate range, more important range, 127.50 to 130. The round number. Oil prices are a bit lower, but in relatively high ground. The Australian dollar continues being pressured for a second week in a row, dipping under 72, 72.80. Further support awaits at 72.20, resistance at 73.75, and the Kiwi dollar just under 68. Relatively resilient, but not going anywhere fast this morning. So in general, yen strength, US dollar strength. Events for today, we had positive German GDP did not help the euro. Italian GDP follows, and more importantly, the full Eurozone GDP. It's a revised version. Expectations stand on a gain of 0.6, but given the stronger German GDP, it could be a tick higher to 0.7. We'll learn that. And then the big event for today, 12:30 GMT. Retail sales expectations are high for a bounce on all measures. The first retail sales report for Q2. PPI is released at the same time, will probably be ignored, and consumer confidence also expected to rise. Less important than retail sales, but it's the last figure for the week and should give us the sort of the last tune. I think that if we have, again, positive retail sales or even just okay, it'll be a continuation of the US dollar strength that we've seen since last Tuesday in the past 10 days. But if we have a big miss on this very, very important figure for the US economy, then perhaps we can have a change of course, not a small correction, but fall in the US dollar. Okay, so that's the wrap up for today. I'll answer a few questions and then continue to the preview for next week. Okay, so I see here Ed says, oh, we talked about that. So Iceland is just hot air right now. Yeah, really pretty country. Who trades live on Friday the 13th? Well, some do. 142.50, 143 area in pound dollar. I guess long cable, position to retest broken triangle. Okay, thanks, Luca. Let me share this with everybody. One of Luca's great charts here. Yeah, so it broke out of the wedge. I think in general my bias is still a relatively negative on the pound, unless we get a really good opinion poll about the Brexit. But yeah, so that's a nice chart. Thanks, Luca. And matter of fact, currently short Kiwi dollar at 68.20 and long dollar Swiss. Okay, so you're constructive on the US dollar, as banks say. Luca is constructive on cable. Okay, anyway, that's a great chart. Thank you, Luca. Now let's move on to the preview. So this is a preview for the week of May 16th to May 20th. It's a busier week than the past one. Doesn't mean more volatility, but I certainly hope so. Over the weekend, once again, we have Chinese figures, industrial output in China. This will certainly impact the Australian dollar at the open. Caution is warranted if you have an open Aussie position. Perhaps it's worth closing it for the weekend, because you never know what's going to happen in China, if we'll have a weekend gap to the upside or to the downside. My bias remains negative. On Tuesday, we have Monday, not too many events. On Tuesday, we have UK inflation. In general, we have a series of UK top-tier releases. And next week, inflation figures should shape the next moves of the Bank of England, but of course, not before the EU referendum. For the Fed, we have US inflation figures, which inflation did advance quite nicely, but took a break last time. Let's see what's going on over there. And housing data, which is usually quite mixed. One figure goes positive, the other negative. So inflation is the key event also in the US on Tuesday. On Wednesday, another top-tier figure from the UK, employment data. Employment and, of course, wages. Wages reached a high of 3% year-over-year gain, but then they cooled down, okay, in the UK. And the big event for the week also on Wednesday, the Fed meeting minutes. Remember, it's in theory just a summary of what happened back in April, but the document is edited until the last moment, okay? Edited until the last moment. So if the Fed does want to raise rates, if we have a great retail sales figure, if they're really optimistic, that would be their chance to hint about that, throwing some hints in the meeting minutes. Okay, but I doubt that that's what they'll say. So they'll try not to rock the boat. But anyway, it'll be a big event to watch out for next week. On Thursday, we have the Australian employment data. Employment has been relatively positive in Australia, but the RBA is keen to cut. Let's see what's going on there. It'll be another big test for the Aussie. And a third consecutive day of key UK figures with retail sales on Thursday. And on Friday, we have US existing home sales and also a few Canadian figures that I didn't mention here on the slides. But anyway, we have a very quiet Monday, but then lots of events, with the key event being the Fed. So this week we had an absence of US indicators until today, until we have the really big one today. Next week, it's a bit more US dollar centric. Okay, so that's the preview for the week of May 16th to May 20th. And let's see if we have another week of US dollar strength, but that depends a lot on what we have today. Okay, in the retail sales. So, okay, so thank you very much, everybody, for coming. Let's see if we have last comments here. Yeah, good call, Luca. I agree. Thank you for all your thoughts and careful Friday the 13th. Yeah, you're all welcome. Have a great weekend. I also wish you all a great weekend. Yeah. So yeah, have a safe and successful trading day in markets. I'm happy to see volatility coming back to euro dollar finally. Let's take a last look here. Well, hesitating on support at 113.35. Anyway, wish everybody a great day, a successful day at markets. Hopefully Friday the 13th will bring some scare, some moves, some action. And we'll be here on Monday as usual, covering weekend news, US retail sales, and anything that comes along. So that's it. So that's it for today, for the week. Thank you and goodbye. Ciao.